Durante los próximos minutos vamos a presentarles a Olivier Govaerts, es Senior Client Portfolio Manager, Total Return Equities, Pictet AM, y está aquí con nosotros pues, para poner un poquito de luz en este contexto. How are you, Olivier?
I'm fine, nice to be here.
I want to talk to you about the current overview of the global macroeconomic outlook by regions. I want you to explain us a little.
At the moment, we're quite cautious on the US. We start to see the pain from the higher interest rate, especially on the housing market. On the construction, I think that's tough. We see the figures are getting bad and bad. We have some issue also with the US consumer that really help to keep the US economy, because the US consumer is 2/3 of the GDP, of the growth of the US. So the housing market is suffering because the mortgage rate reached 8%, so more expensive. On the construction side, it's also more difficult, and the consumer had some saving from the COVID because they received subsidy from the government. This money is disappearing because of high inflation. So now it's becoming a bit more difficult, and we worry on the US. That's a region where we have a very low exposure. Regarding Europe, we believe that Europe is a bit in advance compared to the US. The macroeconomic figures in Europe were really terrible this year, really bad. But it seems now it's bottoming, so it's not getting worse. It's still at very bad and contraction territory, but at least it's stabilizing. So we're a bit more optimistic on Europe. And between the two, I would say the big question mark is China. China is a mystery. I think that the economy is getting bad and worse for now 3 years. Investors are waiting for measure from the government, so they make some small measure here and there, but that's not enough to convince investors to invest back in China. So I think for us it's difficult to anticipate what's going on, because from one day to the other, the Chinese government can announce a huge measure. That's what investors are expecting. But if it's not happening, so far the measure taken by the Chinese government just help a little bit the economy. But for us to go back into China, we need to see a big measure to restart the economy.
The situation is a little complicated, but if we talk about the sectors, in which sectors do you find value in this moment? For example, what about the technology sector?
I think technology is a very interesting theme. As we know, this year the performance of major markets were driven by the Magnificent Seven, so 7 stocks that drive all the performance of the market. So obviously NVIDIA, there was all this big hype on AI. So for us, we believe that NVIDIA is a bit expensive at the moment, but there's other way to play the AI themes, for example, to the cloud business. Companies such as Amazon, Google, Microsoft have a big cloud business. They're going to benefit from that. Semiconductors, also companies such as Taiwan Semiconductors will be direct beneficiary from the AI. Otherwise, energy, we positive on the sectors. We believe that the OPEC is really cutting supply. They want to maintain a high price. We see that in the US, the shale gas is not coming back on the market, so we're going to continue to navigate with tight supply and okay demand. So we believe that the price next year will remain high. So that's a sector we're positive. I would say that's the main sector where we're positive at the moment.
I want to ask you about your scenario being applied in selection of positions in Pictet total return alert strategy. Can you explain some examples of this?
Sure. I think what we're trying now is to find businesses and companies that are able to, that first have pricing power. So if there's some inflation, they can raise their prices. And also to be able to navigate an environment with interest rates around 5% and inflation around 3%. So in that environment, we have what we call a barbell positioning. So on one side of the portfolio, more defensive name, like Nestle, for example, Colgate, that's company that have strong brands and that are able to raise the prices even if their costs go down. That's what we like, is that now the prices, the costs are coming down, but they maintain the prices. So that's really impact the margin, and that's positive. And we like also more quality growth company. We have a company, healthcare company called Danaher, which is manufacturing biological medicine. That's a very high margin business. It is a high barrier to entry because it's a very complex process. So we can to find a good company. We also like company linked to aerospace and defense, company like Safran, manufacturing engine for Airbus and Boeing plane. That's also a business that is not linked to the business cycle. There's a growing fleet of planes, whatever the economy is doing. So we tend to find this company that are a bit uncorrelated to the business cycle.
The last question, Oliver, how many these strategies fit in the balanced portfolio in the medium term?
It's a good question. We've seen in a year like 2022 that you need diversification and low correlation between the assets. Last year, bonds and equity were down 12%. Hedge funds or alternative strategy, I would say, outperformed. So we believe that a strategy like Atlas has a really defensive positioning and offer a defensive exposure to equities, and so very important if you have a big market correction like we had in August and September, we tend to really preserve the capital. So I think it's really complementary to cash, fixed income, and equity allocation.
Thanks for coming, Oliver. It's a pleasure to have you here.
My pleasure.
Negocios TV. Thank you.
Thank you.
Oliver nos explicaba un poco estrategias, les comentábamos al principio, ¿no? El entorno macroeconómico